Good day, everybody. Welcome to Hospitality Talks. And for those of our friends that are celebrating St. Patrick's Day, a very happy St. Patrick's Day. We are back here with you to discuss everything hospitality. The lodging and hospitality industry has been decimated with COVID-19 and the resulting lockdowns. There is a saying that before things get better, they'll get worse. Unfortunately, Europe, the most visited region in the world, appears to be aligning with that philosophy, with more countries in lockdown. Most recently, the news about AstraZeneca vaccine being halted in more than 10 countries. The sector continues to face many significant challenges, both in the immediate and long-term basis. Even with these challenges, some of the most influential investors are placing big bets on travel recovery. I am Abid Butt. It's great to be with you, and I'm here with my co-host, Sam-Erik Ruttmann. Sam.
Thank you, Abid, and warm welcome to the Hospitality Talks. This discussion today is very interesting because we are living in this very particular and maybe a little bit unnerving time where we do not know what the short term is going to happen, and even the long term will be a challenge to predict. And we are now having a panel of experts who are expert in asset management, but also there are companies that are investing into hospitality. So it will be very interesting to learn their views of how they feel today, and maybe they can say, well, how they felt yesterday, because things have changed from yesterday until today, as you mentioned, Abid. So if it's okay, let's bring everybody to the scene.
Yes, please. And we join by a fantastic panel of professionals to discuss concerns and opportunities in European hotel markets. First and foremost, Dario Filippone, who is the senior asset management with Schroders. They own and operate about more than 40 hotels across Europe. We also have Frank Croston joining us, who is the founding partner with Hamilton Hotel Partners. And last but certainly not least, Luc Boschmans, who has recently joined Tristan Capital as managing director for their hospitality practice. Gentlemen, welcome to Hospitality Talks.
Good afternoon.
Well, look, thank you for taking the time. And if it's okay, Dario, we are going to ask you to start us out. Tell us a little bit, very briefly, 2020 performance. How many hotels were open? How many hotels were shut down? Which hotels performed better? Which hotels performed were challenged? So just a very brief overview. Most of the conversation needs to be forward-looking.
Listen, 2020 has been probably one in a lifetime year, I would say. At some point between March and April, we had 100% of our hotels that had to shut down for lack of business or requirement from the governments. This has then changed gradually until the end of the year, where hotels that were more exposed to leisure markets have shown some recovery, but that has lasted, up to the end of summer, and then to be in a situation where occupancy were in the single digit, starting then in the end of Q3 and clearly in Q4. So the drop has been dramatic. We are talking about a decrease of about 75% around of the turnover, or 80% of the turnover, versus previous year, and very difficult situation.
So Dario, during last year, all organizations, all owners, operators, everybody went through cost containment measures because obviously revenues dried up overnight. Can you share some of the cost containment initiatives that you put into place to the best that we could?
Yes. Well, definitely, one of the key area of focus has been the management of existing contracts, both with, let's say, associate and also non-payroll related costs. Clearly, we have assets in different countries, and each country has reacted, from a legal standpoint in a different way. So, this has been also largely driven by the local regulations. But then, from our side, we have focused a lot in reviewing the process of production. When I say production, I mean housekeeping process, F&B process, the way we do purchasing, the way we organize our undistributed costs, the existence in some cases of clusters, and whether or not this was adding value, etc. So there has been a very deep dive on a line by line, I would say, analysis to identify the best way to keep costs down.
Dario, the variable costs, I guess, are relatively easy to control, hence the reason they are variable. Talk a little bit about some of the fixed costs, or that typically in hotel lingo terms are sort of tough to shed. Is there anything differently that you might have done in your portfolio to eliminate some of those line items?
Yes, listen, when we started facing this situation, we changed our mentality in the sense that, we get in a situation where basically your survival, gets the priority versus maybe also some other supplier survival. At the end of the day, the situation is as desperate as that, and therefore, we have faced a situation where we started renegotiating, already defined prices of purchase, already defined agreement for some of these fixed costs. We have been in discussion with the management companies to try to reduce as much as possible also, their contribution and their contribution, their cost. And to be honest, they have been also, accommodating because everybody understood the situation. So clearly a complete shift of mentality, and being super reactive has been the key to bring the cost to the very minimum.
Terrific. Now let's look forward for 2021. Can you share a bit of what your projections are? What do you think hotels are going to perform? Which type of hotels are showing better recovery trends?
Babit, clearly this is the $1 million question, and I mean, if you ask me even in 2 months' time, I really, don't have a good answer to give you. 6 months or 7 months from now, it's a big it's a big call. However, overall, what it is clear is that the leisure markets and the leisure segments seems to be the one that are likely to rebound faster, at least in the very short term, because there is a need of the people, to escape their apartments or their houses, their routine or their lockdown routine. And also, the fact of being home over the last months have helped to have some saving, that can be spent also on this type of leisure activities. So, that one is where we see the opportunity in the very short term. We have observed even, last year, some hotels that have done even better than 2019 for few specific months, like the summer months, the hotels that were coast side, seaside, they have done even better than 2019. So we do expect this to happen again and to repeat in 2021. But then, the corporate market probably is the one that is gonna come later, and the MICE segment probably is the one that it will take a little bit longer to recover.
Well, thank you for that. I think that's pretty consistent with what we've been hearing. Leisure market appears to be bouncing back much, much faster, but you are correct. This desire to know what the future looks like is indeed a big task. By the way, I am going
Yes.
to collect bets on this. I'm sort of the
Good one.
optimistic one that I think it's going to come back faster than anything else. But we could possibly start a derivative based on recovery and see how quickly it comes back.
Absolutely.
I'll turn it over to Sam here in a little bit, but one more question, if I may ask you, any new initiatives
Sure.
for 2021 and moving beyond?
Well, basically now is the moment where we want really to reconnect with the clients, because we know that they are starting at least thinking, and planning, as much as they can. Some countries are more advanced on the vaccination campaign than others. So you see that as soon as there is, this opportunity to move and to travel, both companies and individual are very eager, to do it. So that is the moment really to recreate this bond, to be present, to be on top of the mind of the client, and this is a key focus for us in these months to come, through clearly, marketing and other activities aimed at gathering client attention.
Okay, terrific, terrific. Well, let me turn it over to Sam, and I'll be right back with you. Sam, over to you.
Thank you. I understand that Schroders is also investing and operating its own hotels. So looking ahead in the crystal ball, what are the considerations you would need to make when you're looking at the future acquisitions for the Schroders?
But listen, clearly, COVID has changed, the dynamics of the transaction market, because, you have a windows or probably the next 2, 3, 4, 5 years where it's very difficult to predict. So you need to consider this in your projection. And also, you need to be careful at what has been also resilient, during the last crisis, and what the future can hold in terms of geographic and in terms of demographics. So the main criteria and let's say analysis for the transaction market has not really changed, but clearly there is an holding period that is not as predictable as it was before, and this implies different analysis and clearly more cautious.
Now we're looking at sort of the break-even points for the hotel assets. What are the sort of break-even points that you're looking at for different hotel types or classifications? I understand you are operating. Are the 4-star hotels that you are? Is that in the market you are?
Yeah. Listen, we have hotels that are the 3 to 5-star hotel, mostly 4 and 5-star or luxury hotel. And it doesn't really exist an answer, a clear answer, because every hotel lives in the different countries, live a completely different situation. However, we have observed that, if we exclude the financial, component, meaning the repayment of the debt, we could be in the break even, now that the cost has been very much contained, occupancy in between, 25 to 40%. Again, it's a big span, but it depends a lot on the type of hotel, the country, the local regulation, etc.
Yeah. Any particular market that you see is going to be recovering earlier than the others? If you're looking at the areas where you have hotels, just based on the history and well, forget the history, but looking at the future because after COVID.
Yeah, good point. I mean, really, I think it's extremely important on how the different governments here in Europe are going to tackle, the travel industry. Just yesterday, I read that it seems that Brussels or the European Union is willing to have a common policy that define, the rules of travel for all the countries in the continent. And if that is going to be harmonized somehow, we will see the recovery of the market depending on the level of vaccination that each country is gonna manage to achieve. If on the other side there will be a lack of coordination in this sense, then that is a 100 million question. So Abit was 1 million, yours is 100 million, because we really cannot say.
Yeah. Well, thank you, Dario. Let me hand over now to Abit for the rest of the questions.
Sure, thank you very much.
Dario, relative to overall cash flow, everybody has been strapped for the past year because obviously there was no business. The hotels were not operating, and particularly in Europe, different jurisdictions had different regulations as to what could or could not be done. Are you looking at debt restructuring type of stuff? Have you gone through that? Tell us a little bit about the capital market side of things as to what that looks like and how difficult or easy that might be.
But also here again, there has been a huge disparity of let's say policy, among the different assets, in the portfolio, and there is not one fits all, answer or solution. So but overall, banks, have clearly understood that this is not something that has really something that we as owner or operator have caused, and therefore to certain limit, they have been accommodating, the necessity of additional cash and that, to face this crisis. However, what has happened is that they have been much more involved in the business, willing to understand all the actions that we were discussing earlier, aimed at reducing costs and making sure that we really take care of the business. But for us, it has been fine in the sense that this is what we do on everyday basis. But clearly, the level of reporting, the level of exchanges with them has increased, dramatically, which I believe is normal. But overall, we saw that there has been understanding, and not, the willingness of just, put you in default, let's say.
Fair enough. Dario, one last question before we bring our next guest in. You have in your portfolio some leases and some freehold type of assets. Are leases becoming challenging in this environment? How have you dealt with that component?
Clearly, those ones have been one of the most critical. I mean, always been complicated, but there, it is clear that you cannot repay, the rent with the cash coming from the hotel, and therefore there have been very intense discussions with the landlords, which clearly, are not at all happy, to leave this situation. And we have been in long negotiation to find the best way to keep working with our landlords, and we have been until now successful at doing that. But again, because it's a common understanding that this is not something that has been caused by mismanagement or let's say, a bad operation overall. And again, sometimes the negotiations are tougher than others, but that it doesn't seem that there are many alternatives.
Well, thank you, Dario. Thank you for all that. Please stay with us. We'll have you back in a moment. But I'd like to bring Frank Croston for our next conversation. Frank, you have a long history in the industry with big brands, with asset management. You started this Hamilton Hotel Partners, and recently you merged with Pyramid. Tell us what that merger has been like, in a little bit of an overview as to what you see in the industry moving forward.
Sure. Well, thank you very much for the invitation. And the merger with Pyramid has been great. I mean, it happened back in February 2020, so unbeknown to all of us, just a month before COVID. But the timing was good in the sense that it gave us a much bigger platform. The combined group now manages 140 assets with about 5 billion sterling of assets under management. And we actually see the coming part of the cycle, 21, 22, 23, as an opportunity to accelerate growth, particularly in Europe. We're anticipating that as the post-COVID period settles down, there will be a lot of M&A activity, which will require new ownership and thus create new opportunities for management or co-investment.
Frank,
I'm getting some background noise.
Oh, is that right? You're coming across very clearly, so I think we
super.
will.
I'll keep going.
Let me ask you, this independent operator or third-party operator model is relatively new in Europe. Obviously, in US, it's been around for the longest time, and there are lots of larger entities that practice this model. But in Europe, it's relatively new. Do you see this particular model of franchise and an independent entity managing the assets catching on? And what's prompting this wave?
I think it's here in scale already. It's not as visible and obvious perhaps as it is in the States, because many of the third-party managers act within national borders, so there isn't necessarily a perception of them on a pan-European basis. But just to give you an example, Interstate grew in 2010, they had 5 hotels in Europe, and by 2020, they had 140. So, that's pretty significant growth. And there are others that have grown on a similar trajectory: Event Hotels in Germany, RBH in the UK, Q Green in the UK, Algonquin. There are many providers of third-party management, many of whom are co-investing with their capital partners. And I think the driver for this, as it has been in the US, is alignment. It is perceived that the best alignment between owner and operator is when they have shared and common economic goals, and very often the third-party manager will participate in the overall success of the investment over the hold period. So I think the drift towards third-party managers using brand franchises is likely to accelerate as we go forward. And indeed, the brands themselves are increasingly willing to franchise at pretty much all tiers of the brand spectrum, with the exception perhaps of luxury or super luxury, where the brand is perceived to be too interwoven with the DNA of the customer experience. But I think it's definitely here to stay, Abid.
Oh, fabulous. And it appears to be growing globally, quite candidly. In Africa and Middle East, it wasn't very big, but it's grown tremendously there, as is the case in Asia. So if this model is catching on, and some of the owner-operators like it more so that they can franchise the brand. I think that's a great segue in your portfolio. You obviously have a branded, or if I may use legacy brands, and you have some independently branded hotels. Have you seen a shift in performance? Have you seen a shift in a demand coming for these particular hotels?
Not particularly, but there's a lot of research suggesting that in the post-COVID world, or indeed as travel begins to pick up, that consumers may express preference for branded hotels on the basis that they will feel more psychologically comfortable that the COVID security measures will be done to a consistent standard. But in reality, I think that branded and unbranded hotels can coexist quite happily, and maybe strangely, but it might be counterintuitive, but we actually see that independent hotels properly positioned can perform very well in high demand markets. Where you need the brand is where you're in a more challenging market where it's difficult to attract demand towards you, then the brand can be your savior. But in London, Paris, New York, there are increasing examples of very successful unbranded hotels, maybe sitting on a consortia platform that trade very well. So I think the internet and the availability of free travel information and TripAdvisor and the like has been a great leveler and have helped independent hotels of quality to succeed. But the brands through all of that have continued to grow and are vital both for the investment community and for consumers.
Well, I guess in some way this relationship is a bit symbiotic. One grows at the back of the other, I guess. They can coexist very, very well. And the fact that a lot of the big brands now have soft branded collections and that sort of stuff is obviously a testament to that independently branded hotels can indeed perform. Talk a little bit about the recovery trends, Frank, from a market point of view, and also UK. In addition to dealing with the pandemic, UK is also dealing with the Brexit aftermath and some of the economic issues that the entire Europe is dealing with. So help us understand the recovery trends, please.
I think everybody is looking at a long and slow recovery. So if we take 2019 as what we're trying to get back to in terms of performance levels, rate occupancy, RevPAR, the consensus seems to be that for some markets it will be 23, for others it will be 24. And probably the most disadvantaged hotels are large boxes that rely upon scale meetings in urban environments, coupled with airport hotels. They're probably going to be at the back of the recovery queue. They'll get there eventually, and there's no reason why that business won't come back in force. But beyond the pandemic, we are actually exiting COVID into a world that's by and large in recession. And so corporates are focused on repairing their balance sheets and improving profitability. So you can expect, even despite the slow recovery after COVID, that there will be very tight control over corporate travel budgets. There'll be much less willingness to spend on conferences and events and exhibitions. We believe it will come back very quickly. I mean, this week, the Bank of England governor announced that their predictions are that GDP in the UK will have recovered to 2019 levels within the next 12 months, which is an astonishingly strong bounce back. And I think the UK is probably leading the way in terms of the progress of vaccinations and the evident reductions in infections and death rates and hospitalizations, which is all good news. But all that's doing is really protecting the health of the population and accelerating the time when the economy can get back to work. And the news gets better every day, thankfully. But we are very reliant in the UK on international trade and within hotels, international visitation. So we need to be cautious because we need the European Union and the US and the Middle East and the Far East all to have viable recovery programs that allows their citizens to start to travel again. And as Dario was saying, we're all going to be reliant upon a harmonized approach to whatever they're going to be called, vaccination passports that make travel easy and viable.
Well, vaccination passports themselves have become a big topic of discussion, and we'll come to that in a bit. I guess the most likely scenario in the industry that is being talked about is somewhere between 10 and 20% a decline in valuations and EBITDA recovery to pre-pandemic levels in 2024. There are those that think that it might take a bit longer for the recovery, and it's going to be a little bit choppy because, as you said, it's not so much as one country can rely purely on their own borders and for domestic travel. Certainly, if there is demand for domestic travel, that helps, but a lot of us are very heavily reliant on borders to open and trade to commence. And until the world has been vaccinated, that'll continue to be a challenge. Frank, from your point of view, and I'll turn it over to Sam here in a bit, any do's and don'ts for hotel owners that you're dealing with as we try to deal with this unprecedented time of a pandemic and hopefully a recovery to come very soon?
Do's and don'ts. I mean, do engage early if you're in financial difficulty in terms of struggling to meet debt service obligations or payroll or whatever the financial obligation may be. It's a very challenging time for owners, big and small. And the best way through is to get advice early, engage with your lenders and stakeholders and navigate a way through. And if that requires recapitalization, either through calling in more money from the shareholders or renegotiating existing agreements, the sooner you engage in that, the better. In terms of don'ts, don't discount into a falling market. I think human nature sometimes in the struggle to maximize revenues will push hoteliers to drop prices in the hope of gaining occupancy share. And it's really a rush to the bottom if you follow that route. Really, the industry pretty much across Europe was offering good value to consumers pre-COVID, and the consumers aren't actually that price sensitive, they're value and experience sensitive. So if reducing price causes you to cut back on services or other visible aspects of the product or service to the consumers, you'll pay for it in the longer term. So I think within reason, hold price and focus on guest satisfaction. I think even more so post-pandemic, people are going to be sensitive to the quality of the product, the smile that they get at reception when they're checking in, the quality of the food and beverage. It's really back to basics. And I would encourage all hoteliers to, focus on the basics as the guests come back. We think that leisure is going to come back incredibly strongly. First, it will be domestic leisure and drive-to leisure, and business will follow. But even with the markets closed to all but essential travel here in the UK, many of the hotels have been doing 40% occupancy. So the journey back isn't exceptionally daunting. The big change is that pricing power has switched from the hoteliers to the consumers, and we need to get the volumes back up, which is probably going to be mid-22 onwards, so that pricing power is restored to the hoteliers' side of the equation.
Definitely. And quite candidly, this issue with the rate drops, we have all seen it, we have all dealt with it, but unfortunately, it seems like our industry is prone to having a bit of panic attack and dropping the rates, but hopefully we'll learn. Let me turn it over to Sam, and I'll be back with you in a moment. Sam.
Yes, my question is key cost-saving initiatives. What are some key cost-saving initiatives that you are putting in place, whether it's for a short-term, permanent, or on temporary basis until you have the hotels are in full recovery?
Well, that was kind of all done back in March and April of last year, and I think cut and control early is the best way to go there, because cutting incrementally becomes very demotivational for the team. Depending on the environment, and it changes, we're operating across a number of European countries, and what you've been able to do legally and the nature of the support provided by governments has varied quite widely, but generally has been very good and very supportive of the sector. As hoteliers, of course, we'd always like more, but I think it's been across Europe a very balanced approach by most governments. I think where we've made most success in cost cutting is by staff reductions of non-permanent or casual staff, and then where appropriate, where we couldn't see the business volumes coming back within a year, we've unfortunately had to instigate redundancy programs in order to protect the jobs of those remaining. So that's been very emotionally draining for all concerned, not least the people made redundant, but unavoidably necessary for the survival of these businesses. I think the other thing we've done is regarded no cost as fixed or immovable. We've renegotiated every single supplier's contract, and there are certain costs regarded as fixed that we haven't regarded as fixed, and basically have said to the suppliers, if you want to be here next year, then you need to work with us this year. And generally those dialogues have been very productive, I must say, because we asset manage as well as manage, that I think there's been very good engagement on cost saving and profit protection measures by the brands, and they themselves have reconstructed, if you like, their above unit staff deployment in either clusters or shared service centres, and those costs have been reduced significantly, thus reducing the carrying cost at unit level to individual owners. So, it would be unfair to imagine that the brands haven't also suffered massive revenue and profit declines, but I'm just saying that they have been very good partners to the ownership community in trying to do their best to reduce costs as quickly as possible and wherever possible.
Now with the pandemic and also looking ahead about the customer experience that you mentioned, that how important that is, the human touch and so on. But then it also comes to the innovation of the technology, which has become expected. What are you see some of the implementations of technology that is already may perhaps been implemented in the hotels, or where you see something in the future? What comes to my mind is that because of the pandemic, people are they're like keyless, or there are some other features that they see, and hotels has been traditionally a little bit slow to implement because they want to see what works best for the other hotels before they jump in. But are there some things you want to share regarding innovation and technology for now and then for the future for hotels?
I think maybe we're lucky, but almost all of the hotels where we're involved have already adopted the technology you're describing some time ago, such as app-based booking, keyless entry, being able to stream your content from your phone or laptop or iPad onto the screen in the hotel room. All of these things are great, but that's fine for a sense of not having to do interactions during COVID time. But I would say that it can go too far, and eventually people are staying in hotels because they want to experience the interaction and the services and the range of facilities. If not, be careful, because we're just going to push them towards Airbnb or serviced apartments. A hotel is a place for interactions, and I think the technology stuff should be limited to what enhances the guest's experience and not to replace human interaction. It may take us 10 years. It's like destroying the high street because we're all buying on Amazon, and in due course you wake up and wonder why there are no shops in town centres anymore. It's kind of be careful what you wish for. Technology is an enabler. It's not a replacement of good quality service.
Yeah, I mean, somebody has said wisely in the 60s that we overestimate the impact of technology in the short term and underestimate the effect in the long term. And I think it was also some computer scientists that say that in the 60s, and it's also true that certain things are going to be implemented, and we appreciate it quite keenly now, particularly during this time. Okay, thank you. I will pass it over back to Abid for the final questions.
Well, just a couple of more comments, Frank, before we bring our next guest in. You talked a little bit about brands being good partners and curtailing some of the costs. Some of the standards have been done away with during this pandemic, just so that the cost can be curtailed. What do you think is going to become permanent versus just temporary? Any initiatives that you think would be becoming a brand standard at this particular point?
I'm genuinely not aware, and we are working across a lot of brands and a lot of hotels. I'm not genuinely aware of any reduction in brand standards that has been caused by a desire to save costs. Now, a lot of COVID-induced government legislation has had that effect. For example, if the government says you can't serve in a restaurant, then the restaurant facility closes, and depending on the government, you're either allowed to do room service, or sometimes you're only allowed to do takeaway from a service point in the public areas. Now, those measures generally will have a cost reduction effect, but it isn't at the instigation of the brand. Another example, room servicing. Many guests have not wanted to have their rooms serviced at all during COVID. And so therefore the number of, times your room is cleaned during a stay and the number of times your linen is changed may have dropped off, which appears as a cost saving. But I'm not aware of a single brand that has itself introduced that measure as a response to a desire to save costs. So my simple answer is we're all following what the law requires us to do. And as and when we're allowed to resume health clubs, gyms, meetings, weddings, whatever it is that we haven't been allowed to do, I believe that the brands and the owners will be back doing them just as they were before COVID. I genuinely don't think there's a hidden agenda to try and curtail services, because otherwise the risk is that there's no differentiation between select service and luxury that the customer can discern, which will basically hurt the luxury and upscale hotels who no longer offer the value for money that they previously were positioned to provide.
I think this conversation about the brand standards and relaxing some of the requirements is mostly in the middle band, quite candidly, possibly from select service to upper upscale. Over a period of time, things have evolved where the either the guest desire and or cost reduction, some things have gone away. But I believe luxury, by and large, would be left alone because that has a certain expectation. But if you look at it, some of these social hours in select service or upscale hotels, they've been done away with either as a government regulation or a relief on brand standard. I'm not sure whether that'll come back, or this complimentary breakfast. I'm not sure if that's going to come back, or for that matter, daily housekeeping service, which has been practiced in the brands forever. And then some of the brands started giving frequent guest miles to entice people not to take the daily service. And now, because of COVID and because of guest desire, they don't want anybody in their guest room. So that has been done away with. So it'll be interesting to see actually what comes back, because even the travelers have changed their habits. But thank you for that, Frank. Really appreciate it. Please stay with us. We'll have you back. At this point, I would like to bring up Luc Boschmans. Thanks for being with us. Thanks for taking the time.
Thank you. Thank you for the invitation.
Luc, not only that Tristan has decided to go heavily into hotels, they brought on a heavy hitter hotelier in yourself. Talk a little bit about that. What's prompting move into hotels?
Oh, well, I think about a year and a half ago, so the senior leadership of Tristan Capital Partners already decided to go into the hotel space. Now, for the moment, it looks, of course, that like this is a more or less a COVID strategy, but it's not at all. So as a real estate investor, and Tristan currently has around 11.5 billion euros under management in all different asset classes. So at one stage, if you want to continue growing, then you have to go in the hotel space, because that was really the area where Tristan wasn't that active yet. So that's why the decision was taken to go into that space.
Fabulous. And quite candidly, at this stage of the industry cycle, there are a lot of people that are entering into the market, and private equity appears to be leading that charge, because massive amounts of capital has been raised for transactions. What are you seeing in your pipeline? What are you seeing from transaction perspective? Are valuations holding? Give us a bit of an overview, please.
Okay, so since I started in November, we looked at around 100 opportunities so far, totaling around 300 hotels. So we looked at them on paper, right? Unfortunately we weren't able to go there. So we do see some activity in Spain, in the UK, in Italy, but for the moment, with regards to transactions. The one area where we haven't seen that much opportunity yet is in the distressed hotel space, right? So the real COVID price discount is not something we have seen so far. So we've seen a little bit of movement, but in the end, not that much. As a matter of fact, we even saw on one opportunity, that was a hotel which was already on the market before COVID, that the price actually increased due to the I suppose the lack of product on the market and the amount of equity out there. So that's interesting. I hope that's only that's only one anecdotal example, but
I hope
Well,
so.
look, so far from what we've been hearing as well, that the valuations are holding. Now it'll change because a lot of the government programs and forbearance type of periods are going to run out. So I'm sure there would be more stress on the market, and there would be some distressed assets that would come in. But by and large, from what we've been hearing, that the valuations are going to hold. Your investment thesis, as you starting to put this thing together, and you as a person leading the charge for lodging and hospitality investments, you compete with other asset classes, offices, warehouses, industrial asset classes. They're sort of very neatly packaged, presented very nicely, and then come the hotels, where there are about million different variables that go into it, and you competing for the same funds because your fund is a commingled fund. Talk a little bit about that, please.
Yeah, so well, first of all, I think it's important, that we all believe within Tristan in the long-term fundamentals of the hotel business, right? And it is. It is quite different, of course, investing in a hotel than investing in a logistical platform. So I also have to say that we started also with doing a little bit of internal information sessions about, okay, what does that actually mean, in investing in hotels, and because you are in the end, buying a whole business with employees, with managers, with lots of stakeholders. So it is quite a different business. But of course, we find that fascinating, right? So that's why Tristan decided to go there.
Terrific. Hey, I will turn it over to Sam here in a bit, but are you focused on any particular markets? Amsterdam continues to be a very hot market. London and Paris and Berlin have always been in the forefront. Are you looking at other markets? I understand Costa del Sol area in Spain, but Spain, generally speaking, has become a very desired investment market.
Well, yes, we have a pretty broad strategy, first of all. So we can look at many different geographical locations within Europe. So we can even go a little bit to the east. So we'll definitely look at urban hotels, resort hotels. We also like long stay. I think we'll be more active in like the budget to upscale type of hotels. That's where we've seen the most of the opportunities so far as well. As long as these opportunities fit in our two buckets. So we have on the one side a core plus investment vehicle, and on the other side a value add fund. And we can be active in both funds. So it really depends on where we will find these opportunities.
Terrific. Well, let me pass it over to Sam, and I'll be back with you in a moment.
Okay.
Yes, Luc. I have a question regarding blockchain and bitcoins and the digital currencies. Reason being, it has been a lot of buzz about this particular topics, and I started to look at some case studies, and one thing that came up recently, I read about the tokenization or the financing of hotels with tokenization, and meaning that there were some test cases in Colorado for a hotel that was they're using tokenized to finance the hotel asset partly, and then gives an opportunity to buy partial assets, not just a minority ownership or so on. So any thoughts on this, and how do you see that in your world, whether that fits into what you may consider in the future when you're looking at prospective opportunities?
In terms of financing, you mean?
Yeah, well, if you would look for that financing for...
Yeah, well, for the moment we're not there. We're not there at all. I think it's very early, right? So, you know, with regards to financing, we continue talking to, you know, the typical regular clearing banks, and actually, you know, so we had quite a lot of conversations lately, and I have to say, you know, of course, financing is difficult for the moment, but you know, the signals we received so far is you know, it's not all bad. I mean, some of our potential financing partners clearly said, okay, if you have an asset in the right location, talk to us, and we'll see what we can do. We'll see what we can do for you. A few of them said, if you want to have a hotel financed, you know, give us a call after the summer. But those were really the exceptions, I would say.
Okay, now this was just curious because it's being discussed in the market, and also since we have few hotel students and master's degree students who are actively talking about Bitcoin, so they asked me to ask that question, so I thought I should share this in this episode. But over to you, Abid, for the rest of the questions.
You know, Sam, it's a really interesting point. As a matter of fact, I was just participating in a session on commercial real estate financing, and cryptocurrencies was heavily discussed. I guess the advantage of doing that is it will truly democratize investments in real estate. But at the same time, if you invest in a publicly traded company, it somewhat does the same thing, but more to come. It's not a very commonly financed vehicle today in commercial real estate, but I think it's a matter of time that it'll come in. It's being used more often in multifamily sector than it is in lodging. At least that's what I hear. Luc, talk a little bit about the future outlook. Any bets on recovery?
Oh, well, that's you know, like Dario said, you know, it's the $1 million question, right? So and obviously, if you're, you know, we've been looking at a lot of potential deals, and the question is always, so when are we going to come back to this previous peak level, which, you know, usually is like 2019. Not always. Sometimes it's maybe 18 or 17, but and you know, to try to give an answer to that question, and, you know, in the end, in your underwriting, you have to come up with a concept, or so, and you have to try to find an answer to that. So you have to really, I think, have a very good look at your business mix, and try to understand, you know, what type of customer you have, where are these people coming from, these guests, and when do we think all of these segments will come back, or not, or differently, and you know, obviously, you know, with regards to corporate travel, that will take a little bit more time, but in the end, then it's all about, you know, trying to come up with a business plan and a strategy in order to maybe replace that business, or partially, or and work together with your management company or operating partner to find the right strategy to make that investment happen, right?
So, Luc, one last question, and then we'll bring everybody back together. In an environment where capital markets are very hesitant, at least that's what we hear, except on performing assets, maybe they would be willing to come forth. In markets where transaction activity has slowed down dramatically, at least as of now, there are no real comps available. Cap rates are up in arms. How do you underwrite a deal?
Yeah, so it very much depends, obviously, on what's the type of hotel, what is the what are your assumptions, and of course how are you going to price that risk, right? So I can tell you we have a lot of discussions currently about is this now a value add investment or a core plus investment, so the line there is of course very very thin, and it's fascinating, but yeah, yeah, there's no not one answer for this. It's a very deal by deal approach.
Fair enough. Well, thank you so much, Luc. Thanks for being with us. Sam, if it's okay, we can bring everybody back together. And I want to continue on with this particular topic, possibly on valuing the assets, because all the comparisons are out the door. In best circumstances, it was always on assumptions that we made. There are more assumptions being made today than ever. And I want to figure it out if somebody has the best crystal ball. So, Frank, if you don't mind, I'll ask you to show us your crystal ball and see how you would value the assets, and what assumptions will you undertake?
Well, I think it starts from the basics of what does performance look like in the future. And although that's more challenging today than at any point in history, it's still something that you need to do. So hotel performance relates very closely to overall economic performance of the host country. So the starting point is, what is GDP forecast to do? And then you start to look at, okay, is the demand here domestic or international? So if it's more international, or the more international it is, the longer the recovery is going to take. What is the business mix? Is it meetings dominated? Again, that's pushing you to the back of the queue. But if you sat, I don't know, 10 investors separately in a room and gave them the same information, they would actually converge to a very narrow range of performance outcomes between now and 2025, regardless of the city and the history of the asset and the potential. Because we're all dealing with available information and extrapolating from today into the future, which is why when you run a bidding process, the bids come strangely to a very narrow range, and it's the appetite to secure the investment, the enthusiasm, if you like, at the margin that normally predicts the winner. It's not as if somebody is bidding 20% more than the next bidder. So I think the process is fine. I accept entirely it's more difficult, but I think the miss is going to be on the slope of the curve rather than the end point that these businesses can get to at exit. And really a lot of the value return is contained within the exit that's achieved. Certainly the carrying costs become more burdensome if you don't get there as quickly as you hope. But a big chunk of the overall investment performance is exit related. So the most important thing is this a good asset to own? What's our business plan? And if you were granular in your underwriting before, be even more granular now. That would be my message for how to pick the right assets to buy during the next 12 to 24 months.
Well, Frank, that's very interesting. Two things: it being more granular than the industry has been in the past. I don't know if any transactions would ever transpire. What will be paralyzed through analysis? Well, we've been anyhow. But what I find very interesting is, though the bid-ask spread is closing, I understand that the bids come on a wider range. You alluded to that they are coming in pretty close together, which is I find it very interesting. Dario, for you, even apartment buildings or apartment dwellings with hotel-like facilities and services, or extended stay product, but not typical extended stay hotel, the apartments have become a very attractive investment. Are you guys looking at alternate accommodations or alternate lodging facilities, or are you still focused on traditional hotel operating models?
Well, we have been looking at, let's say, non-core, let's say, hotel type of investment, even before COVID-19. So, that has not really changed for us. In this specific case, we saw the resilience of this type of assets or market versus the classical hotel market. That's for sure. But again, the next crisis is always different than the one before. So the fact that it has been resilient now does not mean that the next crisis it will be the same. Maybe it's going to be the opposite. So I don't feel confident to draw any conclusion on the resilience on that specific market, for the future. However, clearly, as also the other panelists have indicated, it's fascinating to see how the industry is moving, is shifting, from the classical hotel towards, the long stay type of assets, and definitely, it's also another area of opportunity there.
Well, the most recent transaction of extended stay America with Starwood Cap and Blackstone, a big transaction, possibly the largest transaction during pandemic, I guess endorses that segment has done fairly well. But also, if you look at Airbnb's valuations and how their stock has traded, that continues to do well, while the urban core assets are really sub-performing today, but it's a matter of time that will come back. Luc, for you, and I'll go to Frank after this for the same question, any lessons learned from this pandemic? Dario already said, whatever we will learn from here, next pandemic, we're going to have to start all over again. What are some of the lessons learned that we can put in our toolbox, if you would, and hope that we will be not ever be using that, but at least we'll be equipped with them?
I think, I have to refer a bit to my previous work experience, where, we used really the time to go through the cost lines, like Frank said, to see, okay, where are all these costs, also the above property costs from the operators, for example, what's in there, because you usually get one invoice with a lot of different costs, and when times are good, then you tend to focus on other things, and you have other priorities, right? But I think this was also a good time to really dig into that and say, hey, do we need a webcam on the roof, which is showing the weather outside, and look at how much we pay for that. And in some cases, we were even filming the competition across the road. So these are things, once you start digging into all these little cost lines, you find a lot of stuff. So I hope that the industry and the operators and everybody really learned lessons from that as well, and that once the economies are going to start to open up again, people are going to travel again, we don't see these costs coming back, creeping back, like they say in the US as well. So that I think is a good learning.
Luc, that webcam that you referred to, I thought that was keeping an eye on your competitor and seeing what the traffic was. But Frank, anything else to add before I turn it over to Sam? Any lessons learned from this pandemic?
Well, I think the lesson that the industry ought to have learned, but probably hasn't yet is that the traditional lease structure is completely unfit for purpose to trade successfully for both stakeholders, landlord and tenant, through the cycle, particularly with this type of disruptive event. I mean, basically, the lease construct is designed to give a fair reward to the landlord over an extended period of time and to impose a fair burden on the tenant to allow them to use the asset economically productively to make money over the length of the lease. Now, where trading is legally prevented and yet the rent continues to accrue, clearly something is wrong. So again, there are regulatory controls at play here that need to be reviewed. But take, for example, Germany, where leases are by far the dominant form of real estate structuring. The BaFin financial regulators' rules on what percentage of a lease has to be fixed require, it's not written down, but you can guess it if you sue people often enough, 70% of the rent to be fixed. Well, that's simply too high. And what would be a far more logical structure is a lower fixed point and a more variable component that over a 10, 15 or 20-year period gives the landlord the same rental receipts, or maybe even slightly more, but in exchange, the tenant is able to survive. Now, we're all interested eventually in the health of the hotel industry, I hope, and that's going to, once it happens, if it happens, lead to a healthier industry where all stakeholders benefit, rather than the current far too narrowly constructed lease formula actually creates unnecessary stress, both for the landlords and the tenants.
Quite candidly, some of the leases, the tenants are just walking away because there is no way they can live up to the terms of the lease, and that doesn't help anybody. That doesn't help the industry. That hasn't helped the tenant, and nor has it helped the landlord. But that's a conversation in itself. It'll be interesting to see how the lease agreements evolve at the end of that, and whether they'll be reworked, because from the very inception of building that asset, certain assumptions had gone into the ground, and it was that I, as a landlord, could sit and clip coupons, essentially, and the burden was shifted to the tenant. I don't know if that will survive moving forward, but thank you for that. Sam, over to you for any questions, and I'll come back in a bit.
Yes, I have. We have listeners and viewers who are from various universities, and these are more on like sort of personal questions to understand the way you are thinking. So may I start with Luc? During your morning coffee or tea, what news are you following that involves the role in the company you are at, so that affects your way of planning for your day or the week?
Oh, okay. Well, I think automatically, when you read the news, you're going to look for headlines and articles which could eventually impact your business going forward. Huh? So I think we all read this morning this news about the what they call like the green the digital green certificates in the EU, where you then have some a bit like a vaccine passport, but you will also have your a negative PCR test, or it also tells you whether you already had COVID or not. So the fact that the EU announced that this will be deployed in June is of course great news. And you say, okay, this is one more, this is good news for the summer, right? For the resort location. So automatically every time when you look at an article, you think about, how could that impact my business? I think that's normal. Yeah.
Thank you.
Occupational hazard.
Yes. So it's not reviewing how the Grammy Awards went in USA.
No, but I read that as well, and it was very female this year as well, which I thought was great as well.
Yeah, I
So
agree.
a lot of the women won Grammys. I think that's great. Yeah.
Yes. And then for Frank, a question, what makes a good asset manager? This is someone who probably is interested to get into the industry. What are you looking for in a great asset manager, and what would it be? The qualities.
Strangely, I would say that the greatest quality you need is humility, because it's interesting being a manager and an asset manager. Actually gives our team members good balance, because it's too easy if you're only asset managing to become somewhat arrogant, aloof, and overly critical. It's like a bit like being a theatre critic, and really, what the role that you're cast in is, if it works well, collaborating constructively to improve performance. And what does that mean? It means that if you do the job well, and you're bringing ideas to the table, and you're looking at solutions rather than offering criticisms without solutions, you become quite quickly a partner and a mentor for the operating team rather than a critic. And that's invaluable for the owner, because this is all about winning hearts and minds. And if you can set the direction of travel correctly by having a strategy that works for all stakeholders, and then help people along the way to make sure that as implementation occurs, it's done as effectively as possible, the people on the receiving end of that, the operations team, actually buy into it. And the most rewarding thing as an asset manager is when the operator is saying, that was great, what's next? But I would just tone down. I often wonder how people at university or wanting to get into asset management imagine the process goes, and it doesn't go as they think. You really have to engage yourself at a granular level, and never ask a question to which you don't already know the answer, and then you'll be fine.
Excellent, Frank. There was a lot of value here. Thank you so much. Now for Dario, how do you enter asset management? For the person who has a dream to become an asset manager. What's your opinion about that?
I think that is very important that you get, some operational experience. At the end of the day, although finally the job, will not be reliant on how to make a bed or serve a coffee, but at the end of the day, your knowledge of operations is what bring lots of value into the table. It is just one component, and then I think that it's important that you understand also all the financial aspect, and that's why this role of asset manager, it's really let's say very, very, very complete, very broad, because you are basically the person translating the operations into financial models and numbers, so that can be understood also by people that are not really into the day-to-day operations of a hotel. So being able to do this bridge, it's critical, to be successful in this job. And if you want to get involved into this, well, operation, finance, and then you bridge them.
That sounds like a very good mix. Thank you, Dario. Abid, anything else you'd like to add?
Look, I think we've ran over time, but I can't help myself. I'm going to ask one last question before we close, and I'm going to go to all three of our panelists, and possibly starting with you, Luc. One sentence answers, if I may, because the time is very short. What do you think is going to be different in 2021 and moving forward in our industry?
I think the importance of the E in ESG is going to become more and more important. The sustainability. How can we, as a hotel industry, help making this the planet greener, and what can we do together with the operator to make that happen.
Thank you, Luc. That was meant to be one sentence. Frank.
It's a long sentence.
I think this whole catastrophe will cause brands and franchisees to form better relationships with more transparency and more give and take. I think both parties have behaved well, and I think the future will be brighter because of that.
Fabulous. And last but not least, Dario.
All of the above. It's good as an answer.
That's an easy way out, Dario. It's not that easy.
No, I mean, no, definitely. You know, the future of is gonna really. I join basically Luc and the importance of the ESG, and you know, this change is dramatic and is gonna come sooner than we expect.
Well, thank you. I think the pandemic in some strange way is going to bring humanity closer. So thank you for all your insights. Dario Filippone from Schroders, Frank Croston from Hamilton Hotel Partners, and Luc Boschmans with Tristan Capital. Thank you for being with us. Thanks for all your input. Really appreciate it. Over to you, Sam.
Yes, I'd like to thank all the live viewers and also particularly the podcast listeners who has joined our episode. We are these days on anchor.fm and there is a Hospitality Talks channel. So please tune in there if you have been viewing this, because then you have a chance to listen to some great advice from our experts, Dario Filippone, Frank Croston and Luc Boschmans. So it has been a very great session. So with these words, I'll just close this episode, and please look out for the next episode.
Thank you.